And everybody, it's Tim Razor with Review Asset Management just before 4 o'clock here on a Wednesday night. It's very cool. Before you and I begin, you're going to notice that there are some markings on my chart. And I want to break from tradition where I lead you down a path of what I'm going to tell you in the video and a whole bunch of other things in the beginning of our videos. I want to take you to what I think is the most important chart you could be looking at, because there's been a moment in time in the markets, and everyone has done what I'm about to describe. You have pissed your chips away, meaning you've made money in the markets, and then because the market is just kind of grinding, small little gains here, small little declines there, and then before you seemingly are getting churned in the wrong stocks, which might be the right stocks the next day, but the wrong stocks the following day, and then before you know it, Bob's your uncle, you've given away 3 to 4% of your hard-earned money. And I want to help you not do that, but I want to start the discussion with everybody has done this. I've done it, you've done it, the person next to you has done it. Everybody watching this video has pissed their chips away at one point in time. And I'm not saying I still don't do it. We're human, right? That we're not we're not robots, automatrons that are just sitting in front. I mean, some of us, we got our tighty whities on, and we got our white shirts tucked into our tighty whities, and we're just robots. But most of us are humans. And so what I'm going to show you gives you situational awareness to the markets. And I think that's the most important thing you can have in life, is some situational awareness. Like when someone says, you can't read the room, right? Well, that's because you lack situational awareness. This situational awareness is, I think, critical for your long-term success. And that's what we're looking for, long-term success. And how do you get long-term success? It's by finding your edge. And how do you find your edge? It's understanding where you are in time and space and being able to articulate that. Because if you can't articulate it, you sure as hell aren't going to be able to understand where you are in it. So let's do that together. Let's you and I look at this market together. And so on your chart, you'll notice I've got a weekly at the top here. There's a weekly SPX chart, okay? And maybe 3, 1, 2 plus, 2 plus, 2 plus, 3. We'll do that one together since I failed the market. 3, 4. What does 4 mean? And what I want to point out before I go into what those numbers mean, I want to point out the year 2018, 2019, and 2020. And so this 2018 into 2019 year, okay, this 2018 ends here, right? 2019 ends here. So this is the start, just so you understand where we are, 2020. This is the start of 2019. And this, my friends, is the start of 2021. Okay, and so everything in the history of time reverts to the mean. I just chose to go one period over into 2018 land and to show you what you can expect, peak to trough. And by the way, if you subscribe, let me just show you this. If you subscribe to our email, right, and we don't spam you, we just literally send you a podcast once a week and the email 5 nights a week, six days of content. No sales pitch, nothing like that. You've been getting the class. It's pinned to the top of your email. It's been in the body of the email. It's right in there. The whole what I'm about to describe to you. The market's designed to take half, if not back, all of the gains from prior uptrends. And you can measure that, my friends, by looking at this purple line here. And this purple line on my SPX weekly chart is the 21 exponential moving average, okay? And so that's the mean, whether you're using a daily or a weekly or a 78-minute chart or a 30-minute chart. The 21 is the mean. It's just what time frame are you on. I'm on a weekly here. And what I want to point out to you is kind of peak to the low, whether you find support at 21 or not. And look, this went a bunch lower. But initially, right, in 2018, this before it kind of tried to stop and reverse itself, but it failed. You went down 300 points from this point here to right where that line stops, okay? And I want to show you that most of the time you're going to get a 200 to 300 point drop in the SPX. So just keep in mind, if you don't speak SPX points, so 1 SPX point equals 8 Dow points, right? And so 3 times 8, that'd be 2,400. So it'd be a 2,400 point in the Dow to the downside, roughly, okay? You can do the rest of the math. So now, and of course it went much lower. But just that initial, you know, kind of like, okay, we pause, we're going sideways, and then drop. Here is just a 100-point drop right here. This one from here to low is 200 plus points. And you're like, Tim, prove it to me. I want to see numbers. Well, look to the lower side of your screen. And I've got to move a box that is blocking my view of the side of my screen. So when I'm looking here, you can see it says 2800 on the right hand side of your screen. And if I come down here to the bottom, it says 2695, right? Remember, we're playing grenades, not horseshoes. So we're in a zone, okay? It's not exact. It's just you need to understand what to expect for a pullback. So here's like 2900, we'll just call it 3000 down to the low of 2700, right? That's 200 plus points or 300 points. Here, 2996. Let's just round up to 3000. Down to here is 2700. We'll just call it, I mean, 2750, 2800. You get the idea. Let's not even do this. This is a pandemic, right? Once in a lifetime type thing. But look at this. What I'm describing to you isn't once in a lifetime. This one right here is 3,500. 3,500 down to 3,100. Is that a 400-point drop? Oh my gosh, 400-point drop. You get a 400-point drop now. Some of you, because you're leveraged long, are going to think it's the end of the world, and that's why I'm doing this video. And so here, 300 points, 400 points. What is this one going to be? And notice that I didn't say, is it going to happen? It's going to, right? It's just a matter of when. And so we're going to take a look at that a little bit more in depth here as we go on, because there's a way to help yourself and measure all this. But what you need to understand is a couple of things. Not just the average drop, right? Is probably going to be somewhere in the neighborhood between 200 and 400 points. Okay, that's what it's probably going to be. Well, let's just see. So 4,300. If it stopped at the mean, 43. We're at 40. Do you want to call it 4,400? Down to 4128. Do you want to call it 4,100? So you get the idea there. But I want to show you the effects of stimulus, okay? This, my friends, right here is 2019 into 2020, the last non-stimulative year. And for ever since I worked at IBD and I studied this, you get about 6 to 8 opportunities, right? It's on average anywhere, you know, like 6, maybe 8 pullback times, right? But that's gotten less. And here you had 4 on a weekly chart. Okay? You had 4. In 2020, with the stimulus, as it increased, you got 3. We're over halfway through the year, and you've had 1. And that, my friends, I believe, is the effects of the stimulus. Of course, is there any way to prove this? Prove it to me, Tim. Tell me. Show me the facts. And all I say, do your own work. Go back. I'm doing this chart the way I'm doing it so you can see it. But go back through history and time and see how many weekly pullbacks you get. Measure them. Count them by year. And the fact that we've only had 1, you know, it's that was the thought that comes to mind is, you know, it's like climate change, right? Like some of you are on the, you know, like definitive opinions about climate change. There are definitive opinions about stimulus, and there are people on both sides of the argument. But I contend that the reason why there's only been 1 pullback to the weekly 21 is the effects of the stimulus, but the stimulus is wearing off. And you can see that in a bunch of IPOs that aren't rotating. An IPO club, by the way, we did a podcast back in early June, and it was amazing, and it was thought-provoking, and it formed the origins of the IPO club. The IPO club meets on Twitter. If you want to join the IPO club, find me on Twitter. I'll introduce you to them. At TJ Razor is how you find me. Here, this is my information right here, at TJ Razor. You find me, I'll introduce you to the IPO club. A bunch of stock nerds and market lovers just like yourself. And they are absolutely positively warm, welcoming, and more than happy to show you what they're working on. They're stock nerds just like you and I. They watch all the videos, they love the content, and they discuss it, and they study it, and they make it better. And that's why we put it out in the universe, because we love interacting with you, stock nerds and market lovers. But look, even though there's no marks on here now, just know that you've had one pullback in this effect. And so just because you pull back, this is normal, right? A normal pullback. And so when does it become abnormal? They're all normal, right? And so you just understand that you're going to have, you used to have more of these than you're getting right now. Last year, you only had 3. Well, you're like, Jim, you didn't even count this one. I don't count this one. This is just a weird period of pandemic-y where, I mean, if you want to call it that, then you had 4. But last year, after the stimulus started, you had 3. This year, while the stimulus is still injected into your veins like radiation into the Hulk, you've had 1. By now, I would think you've at least had 2. And so you're halfway through the year and you've had 1. And so does that mean we got to have it? No, it's a market and anything can happen, stock nerds. But what I would suspect is that it's coming, okay? And you just want to understand where you are in time and space. So to that effect, well, where are we in time and space? You are at the +2 ATR, haven't gotten to the 3 on S&P's, we're on an S&P daily chart. And you can see when we've gotten to 2 ATR before, you correct. 3 ATR, you know you're going to correct. 2 ATR, you correct. 2 ATR, you correct. November 9th, we have vaccine announcement day. You get 3 ATR and you pull back. Well, Tim, it's still skewing up. And that's what I want to point out. It's picking and choosing your moments in time, because you're going to go back to the opening theme, piss away your chips if you don't understand the whole ebbs and flows of the market, and understanding the weekly time frame and then working your way down is absolutely critical. It's critical to my work, and I think it's critical to a lot of yours if you understood it. And a lot of you do. IPO Club absolutely does. A bunch of traders I know do, because I talk to them. By the way, the base of all these videos, they come from me talking to you. So talk to me. Well, Tim, how do we talk to you? Well, you go to reviewasset.com. And then you can talk to any one of us, right? So look, here is the portfolio team, all the buys, all the sells, all the different trades, the allocations, all these guys right here. And they're available to you. Here I am at reviewasset.com. Here's America's fiduciary. And I want to tell you something. We're differentiated from any other shop in the free world and China because we're accessible to you, whether you're a client or not. You call stripmalladvisor.com, right? You know, the Edward Jones office or the Amex office or whatever they call it, Enterprise office, or wherever your strip mall is, and they're right next to the Piggly Wiggly, and you want to go talk strategy with them, they're going to defer it to all the mutual funds you're in there. And what they give you, what they sell you, is plausible deniability. They're not doing any of the strategy. Right here on this screen, you're talking to the folks that are responsible to you. And that's a huge difference. And you can call. And you know who's going to answer? America's fiduciary right here, Danny Stewart. 855-732-5932. Being accessible to you is what makes us different. Anytime, day or night, we're going to get back to you. Not a say, no salespeople, right? Just genuine help, client or not. One even quicker access. There it is, a message right there. This is brevity to me. You fill up my inbox and it just gets clogged, and you ask these long questions. You can contact me on Twitter where my DMs are open. Easy peasy. And we can converse that way. Okay. So let's see here. So you're at the 2 ATR here. Does that mean it's going to be some kind of catastrophic pullback? Just pointing out what's normal. But do you, and let's look at the NQs. NQs have been strong, right? They're at the 3rd ATR. Can they go higher? Well, there's a little tiny dip, but a big one. It's coming, my friends. It absolutely is. You just want to be understanding of when it's coming, right? So do you want to be aggressive here? I don't think you want to short by chance, but you do want to understand that if you don't have your setups, you know, there's things you can do, like just have patience and not piddle away your chips. And while you're saying, well, Tim, tell me more, give me more examples. Let's look at Shopify, my friends. I love the stock of Shopify. I think it's democratized entrepreneurialism. I think it's made so many things easier, better than WordPress, better than all the other platforms out there, better than Wix, better than anything. I like Shopify. Okay. So now But what does Shopify do? Oh, so I know what Shopify does, and probably you do too. Let's take a look. Third ATR, pull back. Third ATR, pull back. Second ATR, ooh, that was early. Second ATR, third ATR, little bit, right? Third ATR. Look at yesterday. Like this is the, do you want to establish a position at +1, +2, or +3 ATR, or would you rather establish a position at the mean? Look at this. Look at what happens. So, you know, kind of coagulates at the mean. Boom, Bob's your uncle, right? And so crosses the mean or the 21. So think about it. Take this line on a weekly chart, this 21 exponential moving average, move it down here to a daily chart. And where do you think the best opportunity is to purchase, say, Shopify? Where if you were wrong, like, okay, well, here's an opportunity, right? Like it comes to the mean, it looks like it's going to cross, but then it doesn't get, it just gives up the ghost town. What the hell are you talking about? And while I'm telling you that, you'll know exactly where it's the lowest risk entry point. You'll know exactly you're wrong. Fails at the mean, takes out -1 ATR. There's no law that says you have to hold on to it, that you bought it and you got to hold it. No, that's the beauty of being an individual investor. You can sell it. So if it breaks your support, sell it. Stocks acting well, cross the mean, find support at the mean, and can trek higher. Stocks that, and this is the same damn stock, but would you rather be in at 1,500, writing it down? I mean, imagine you bought it here like 1,500, wrote it all the way down to 1,000, and just now you got back to 1,500, but you can't hold it. Let's get off the treadmill. Establish a position at the mean. It doesn't have to be your whole position. It can be a third, it can be a half, it can be a quarter. Because if it falls further, like, well, I would add if it falls further. Well, okay, you could do that. You could absolutely do that. So we'll go to a weekly chart. A weekly chart. So, no, don't tell me the weekly chart. So they're too long. But look, here, we're on a weekly chart. And where's that 21? The next one, 1,200, 200 points lower. Yeah, right here, 1,271. So maybe you want to wait for the weekly. You don't have to. It might not get there. But just understand where you are in time and space and where you're going to find, and here's the key word, my friends, edge. Where do you find your edge? And if you've lost your edge, what do? SELL. But again, these videos, my friends, they're not for advice. These videos are for your edification purposes only. If you want advice, need advice, seek advice, my friends, please call 855-732-5932. Danny will help you. These guys will help you. Everybody will help you. We'll talk. We love to talk to you because that's what we're in the markets. That's what we're in the business of, talking the markets and putting out our work and telling you what we think is going to happen. Let's look at another one here. Let's look at Docu. So we're on a daily chart still. Docu. Do you want to, like, Tim, well, here's after earnings, and it went from 230 all the way up to 300. And I think that that's a great trade if you've been in it. But if you're not in it and you say you join it here, like you find it like a pitch like 269, like where do you trail it up? Where do you define your edge? And I show you this because sometimes it's okay to miss things, right? That this isn't the norm and you're going to miss some things. And well, it doesn't mean it's a bad stock. It's just ebbing and flowing. So it's come back. It came back to the mean today to 271 and it's found support. Is it going to hold here? I don't know. I'm going to tell you if the NASDAQ breaks, if the NASDAQ decides to come back to the mean, if the NASDAQ wants to come back to its mean, most 75% of all stocks are going to follow the general market's trend. If the general market's trend is reverting a little bit, 25% are going to hold out. I don't know if Docu is one of them, but where do you establish in Docu, not douche, Docu, there we go. Where do you establish in Docu to get an edge? See, and that's the thing, is this pattern repeatable? And it could be any stock, right? Tesla. Let's look at Tesla. Like here, Tesla just goes on this. It sniffs the mean over here, right? Back in 2020, sniffs the mean, and just makes that massive run. But where do you find your edge in Tesla? Yeah, in and around the mean. 3 ATR, pulls back. Now you're back at the mean. Is this an opportunity to Tesla? I don't know. I know that 75% of all stocks typically follow the general market's trend. And so what I want to be is cognizant of that. I want to see things like, look at gold. So gold here, breaks the mean all the way up here, broken trade, and then it comes back up to reestablish at the mean, and now it's at +1 ATR. Is this somewhere I want to establish gold? It's got some overhang here. I'm not really excited about it, to be quite frank. But you get the idea of what I'm talking about. Well, what about VIX, which is interesting? So VIX here, right? VIX you don't want to buy VIX up here, right? It's the same law. +2 ATR? Heck no. Close to +2 ATR? No, thank you. +2 ATR? No, thank you. +3 ATR? Is that what I think about this? The market on 512. Let's look at the NQs. We'll look at SPX. It's easier. 512. 512. Where's 512? 512. Look at this. Oh, we're going down, right? We're going to go down. We're going to go down. We're going to go down. But if you look at the VIX, right? You look at the VIX, you're like, oh, I know that +3 ATR. Oftentimes this is going to be, it's going to revert. Just give it a couple days. 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 And it reverts. And you can use this work to your advantage. This work removes the emotion from it. This work removes the FOMO from your brain. It's the sedative to the dopamine, right? Like the dopamine makes you feel good. And it's like the counterbalance to this. Like, oh, hey, dopamine, like how you make me feel. But typically, if you're getting the dopamine from your trading, it's going to lead to some bad trades. So do I want to establish at +2 ATR at anything? No, my rule is I'm looking at the mean. Now, could I go long VIX here? You could. Again, not advice, friends, not advice. But just understand that if it were to break below here, break support, well, then that's a broken trade. And most likely the markets are moving higher. But right here is an interesting spot in VIX, interesting spot in gold. And let me just point out one last thing to you here, my friends. And we are friends, and I mean that sincerely. Look, I used to travel the country. I was talking about this with Tanya the other night, just meeting so many people. And I do miss that some days. I'm an introvert, might not seem like it, but I am. And but the one thing I really miss is seeing people in person and talking something with them about something I love so much. And if that ever gets to occurring, and I might do it, come out and meet you again. But I used to meet 30, 40, 50,000 people a year, depending upon the size of the crowds. And it was pretty special to me. And so, and I still keep in contact with a bunch of people from my former life at IBD. Anyway, I mean, out on the road that I used to meet. So if you're one of them following the work, I thank you. Thank you for sticking with me all these years. So look, here's the dollar. And what I want to point out to you, yesterday was a tougher day in the markets, and it was a green day for the dollar, right? Today, the dollar's down slightly, and what was it? It wasn't that bad for the markets, right? SPX, up 5 points. NDX, I mean, it wasn't awful, right? Michaelton, do the Dow. Tell me about the DIA. Oops, DIA, pardon me. Green, okay, how about RUD? There you go, small caps are broken. So look, when I look at the dollar, back to DXY, when I look at the dollar, if the dollar goes green and starts pushing up and breaks through this resistance, it's probably going to put some pressure on the markets, okay? But you don't even have to, let's say you don't even have to follow that. Just come back here. Well, Tim, am I supposed to avoid stocks? No, that's not what I'm saying. I'm saying understand where your edge is. And everybody trades differently. That's the beauty of this. We can all learn from each other. We all have some kind of different perspective. So if you know that you get these pullbacks, we've only had one so far. We're probably going to get another one, okay? And we're at these upper ATR bands. Super aggressive or wait for your pitch. And that, my friends, is for you to decide. With that, I hope it helps, and I will see you at the next update.